and welcome to another Smaulgld live stream. Today is Tuesday, September 4th, 2018. Tonight's topic is silver's game changer. Silver smashed to $14. We're going to discuss some history of silver, take a look at some charts that we have prepared for tonight. First, let's take a look at what happened to silver today. It went all the way down to $14. It opened at $14.46. Had it touched briefly under $14, actually hit $13.99. Rebounded slightly the rest of the day to $14 and about 15 cents. Gold was hit, but not as hard. And gold opened the day just a touch above 1200 and closed the day at about $11.92. It fell to about $11.98, but the difference in the price drop was dramatic. Gold fell less than 1%, and silver fell at one point over 3%. So now what you're seeing on your screen right now is that unsustainably high gold-silver ratio. You know, I've never bought into that concept. We've talked about it in the past about how the two metals are indeed different. There's significant differences. One of them being that silver does not have the monetary support that gold does, in that gold is still considered a monetary metal by central banks, and that they do hold gold reserves. They do not hold silver reserves. But we're going to take a look at some historic charts on gold and silver, and there are significant differences. We want to go back, and we did a show called Differences Between Gold and Silver. I think there were about 12 of those. There's also a blog post by Smaulgld of the same title, so you want to check that one out. We've also done specifically some YouTubes and bit shoots on the gold-silver ratio. And tonight we're going to review some of that. This is more of an overview of some gold and silver differences, but this time we're going to use some charts. So as you can see today, the gold-silver ratio went all the way up to 85 to 1. And if you remember last year, 2 years ago, 3 years ago, 4 years ago, when it was in the 50s, 60s, and 70s, you had many people arguing, now is the time to get into silver. Silver's never been this cheap. The gold-silver ratio is unsustainable. And as you can see, there's really nothing stopping it from going higher. But let's take a look now at not just the gold-silver ratio, but the silver price, the long-term silver price. One of the things I'm fond of saying is that silver is a spike and dive metal, meaning that it goes up, spikes higher, and then it just comes crashing down. Now, I don't know if you can see this here. I might have to readjust this. And I think you're not getting it properly. There we go. All right. Try to get the charts there for you. This is a long-term silver chart going back to 1800. It should be focusing in your screen in a minute. If it doesn't, I'll have to re-upload it. It doesn't seem to be coming through. Well, what we're looking at, or what you will be looking at, really shows two major towers in the price of silver, and they are 1980 and 2011. And you can see them off to the side on your screen there, but that's not really helpful. Well, let me see if I do that. Maybe that'll square it in. It's not very good. You'll get the charts tomorrow in the email if you sign up with Smaulgld, and you can see on the website. Sorry, you really can't see the picture there very well. Well, in any event, that's from 1800 to 2000, and you just see a series of these types of these spikes, intermittent spikes, and they're almost inevitably followed by an immediate smash down. So the spike doesn't last very long, and then the price comes tumbling down. Let me see if I can get another image up there for you to see. I mean, you kind of can see it, but it's not very good. Let's see if I have another. This is since 1900. Let's see if this one shows up better on the screen when it comes in. All right, the chart I had, that chart was from 1800. and you can see the spike. The one that should be coming up on your screen is going to be a chart from 1900 to 2011, and you can see there's really just two areas, one more other than the 1980 spike in price and the 2011 spike. There was a somewhat of a mini spike in 1920, and that partially was a result of a silver shortage that was somewhat created by another silver shortage, which was the one that happened in India, and England needed silver because they had taken over India as a colony, and they were printing or making Indian silver rupees, and they needed silver. So the U.S. melted down hundreds of millions of ounces of silver dollars, the Morgan dollars, and they got caught short. And in the 20s, that's why some of your key dated silver coins, dimes, quarters, half dollars are all in the 20s, because for a period of time there was a shortage. I don't think you're getting these pictures, are not showing up. Apologize for that, but that was another reason why the silver price rose. But then it fell right back down once the Nevada miners got into full gear, because what happened, you can see a long-term silver chart from 1900? Please say yes or no, because I'm looking at a chart. Well, let's see. Chart I'm looking at says long-term silver, and you can barely see it. It doesn't have the full chart. Yeah, so what happened in 1920 was they knew they had the silver, and that's why Pittman, who was a Nevada senator, they knew they had the silver in the mines, and they wanted to put people to work. But because they melted down the silver, and then they had promised over the next 10 years or so to mine it back and buy it back at a higher price, there was still a period of time in the 20s when there was a silver shortage and available, and that's why it took a while for the Nevada mints to get up to speed. And that's also why in 1934 there was still a silver shortage, and President Roosevelt had that executive order where he tried to get some silver back so that they could mint more coins. All right, I don't know if we can do these things with the charts here. Let me try the next chart. Let me see. Okay, so you are seeing the charts. I'm just not seeing them. Hard to see the dates. Okay. Let's take a look at the next chart that we have. Now, I want to show you, if you were able to see those silver charts, you could see how spiky they are. Up and down, up and down. Let's take a look now at a gold chart, and you'll see, other than since 1971, gold was a pretty stable in price, and today it's if you look at the chart when you see it, it goes pretty much straight up. It hasn't really been volatile. It's if you look at the chart from 1720 to about 1860, it's pretty flat. Then you've got a bit of a peak around the Civil War, and then it's flat again through the 1930s. Then it gets revalued in 1934, and it stays, because they kept it there by law, from 1934 to 1971. And once they got rid of the gold standard, that's when you can see it really takes off, and it moves higher. While it has been slightly erratic in the last 30 years, the basic trend has been pretty much straight up. Even if you look at, so the difference between 1900 and 1200, that's not really that big of a deal in percentage terms, considering in 1980 it was, or the 70s, it was $300-400 an ounce. So it's pretty much gone straight up, whereas silver has made a couple of spikes and dives, but the price of silver today is less than it was 10 years ago. And if you go back 10 years in the gold price, you're not going to find the same thing. So gold has definitely had a much more stable run. Now I want to show you, and I hope you can see the chart, otherwise you'll have to look at it tomorrow, but I did an annotated chart on the gold silver ratio. that covers basically what we just discussed, but you can see it on the chart, the gold-silver ratio. Let me know when you see a chart that says gold-silver ratio at the top. I don't want to talk about it and go through it. It's annotated. It explains everything, but if you can't see it, it's hard for me to explain lines on a page. All right, you see it. All right. Now, on this chart, the gold-silver ratio going back 100 years. Now, you always hear gold-silver ratio, unsustainable, natural ratio, 16 to 1, 9 to 1. That's all based on really hopium, because there's no such thing as a natural ratio. The only time there was a natural ratio is when they set it for bimetallic purposes, and they just picked a ratio. It was close to 16 to 1 based on relative rarity. But relative rarity does not determine price of items. My favorite example is my art is rarer than Picasso's. Picasso's made more art, but there's a reason mine is cheaper and his is more expensive. The other one is platinum. Platinum is far more rare than gold. There's 10 times less platinum mined every year, and yet the price of gold is more expensive than platinum. And the reason for that is gold is more of a monetary metal. Gold is more desired than platinum, and certainly more than silver for jewelry and for other things. And the same with Picasso's artwork. It's more desired than mine. So the relative rarity argument really is not much of a winner, and yet people insist that's why the gold ratio has to come down. The other thing I've heard people say, which also isn't true, that it used to be 16 to 1 before the gold standard. Well, that's not true either. Let's look at the chart. The Gold Act of 1934 set the gold price at $35 an ounce. And then I've drawn a line there, a parallel line, horizontal line from about 1934. And that price stayed at $35 an ounce all the way through the early 1970s. And because the price of gold didn't rise, wasn't allowed to rise by law, silver, even when they had the price of gold at $35 an ounce, got up to 100 to 1, the gold-silver ratio. And of course, over time, with inflation, it started to come down, and it did get down to 16 to 1 at the very tail end of about 37 years worth of gold staying the same price. It didn't even get to 16 to 1. It got to about 17, 18 to 1. You can see that in 1967, I think that is on your chart. The other one was, if you go to the Pittman Act of 1918, that's 1920. Same thing there. Silver did have a brief moment where the gold-silver ratio went to 16 to 1. But again, you can see how short-lived it was. It went right back up in 1920. And by 1925, it was up to about 40 to 1. But I don't like the period from 1900 to 1971, even though it proves my point that rarely is the gold-silver ratio been 16 to 1, and when it was, you can see it was very short-lived. But the point is, I don't like this horizontal line period, because that doesn't give you an accurate indication of the price of gold versus the price of silver. Why? Because the price of gold was fixed at $35 an ounce, and it clearly would have gone up and down during that time period, most likely gone up a bit, and that would have driven the gold-silver ratio even higher than 100 to 1. It was only through, you can see from the basically from the 50s to the 70s, the ratio starts to come down dramatically, but that's a function of all the inflation that was in the system. And gold, they never wanted to revalue gold. That was a problem, because that would devalue the dollar. Since the U.S. was in charge of the Bretton Woods agreements, in a sense, they were the country that had to cough up the gold to back the dollar. They didn't want to devalue the dollar by changing the price of gold. And we've heard the stories of the London gold pools in 68 and 69 dramatically trying to keep the price of gold at $35 an ounce. And what can stay at $35 an ounce for 35 years? And that's the only reason, in my opinion, that the gold-silver ratio went down to 16, 17 to 1 in 1967. And it went right back up once they got rid of the gold standard and gold started a free float. Now, we then did see, we had a period of inflation from 71 to 1982, and that was a result of going off the gold standard, years of the welfare warfare, the Lyndon Johnson's Great Society, the Vietnam War, the space race. All that started a pinch and then going off the gold standard, that really hit the dollar for a loop, and that drove the price of gold and silver higher. And remember, in 1971, it had only been 6 or 7 years since they took the 90% coins and stopped making them. It had only been a year since they stopped making the Kennedy 40% silver. So clearly, silver was still thought of as a monetary metal at the time. Gold had recently just lost its monetary status. And the world, meaning the major developed world at the time, Europe, was very concerned, and they wanted to return to some type of gold standard. So gold and silver were definitely very fresh in people's minds as the real money, not in the fiat currencies. And so in 1980, you can see the gold-silver ratio did go down to 16-1, and that was a result of not just the rising silver price and the gold price and the inflation, but also because the Hunts brothers were making a concerted effort to get as much of it as they can. Now, what the Hunts brothers were able to do does highlight how small the silver market is. What they did was they bought as much physical silver as they could, shipped it to Switzerland for storage, but then the mistake they made was they tried to buy a lot of futures contracts, and that's where they got screwed up. They bought on margin, and then COMEX changed the rules of the game on them, and then finally they said you can only sell silver on COMEX. That drove the price down, made their margin position untenable, and finally they had a cave. And then you can see, boom, right back up goes the gold-silver ratio. It's much harder to corner the gold market because there's so many different parties that own gold. There's a lot of gold that's scattered all over the world. There's probably 20, 30,000 tons of gold each in China and India, probably the same amount or more in Western Europe and the United States. Not just central banks, just in general. It's scattered all over the world, and it's easier to find gold. People lose silver. Gold seems, they say that most of the gold mined, there's probably only a small percentage of leakage of the total amount of gold. Even when you have a shipwreck, they manage to find out where it is, and they go and get it. So you've got those periods, Pittman Act 1920, that silver shortage there, but then the ratio doesn't last very long. Then you have the cumulative effect of 35 years of the gold price at $35 an ounce, the gold-silver ratio going down to 17 in 1967. Then you have your Hunt brothers impact in 1980, and then the price the price plummeted and the gold-silver ratio went back up. But ever since 1971, you only have that one period of time it was 16-1, and then after that, you can see it's basically been 40, 50, 60, 70, and 80. And the only time we came close was when it went into the 30s, the gold-silver ratio, was after the financial crisis of 2008 and 2009. We then the Fed did QE1, and then November 2010, I think they did QE2. And gold had been rising much faster than silver in 2008, 9, and 10. And then silver really caught fire. It had been lagging behind gold, and then boom, went from 20s all the way up to 50. But then you can see in the gold-silver ratio, that didn't last very long, got smashed immediately. And I think the thing with silver is when you see these spikes in silver, they're easy to knock down. You just throw paper shorts at them and boom, they're finished. So that's the other reason. Silver is a much smaller market. And that shows historically why silver has not been this stable as store of value. Let's go back and look again, now that you have that in your mind, at the difference between the long-term gold price. Let's look at the silver price since 1900. I'm going to give you that one. And you see a jagged line. It's somewhat heading straight up since 1971. Remember, in the 1990s and the 2000s, the price of silver was in the single digits for the longest period of time. But even then, you can see on the chart, it's very... a lot of spikes, even within the small spikes. It's a very volatile metal, mostly due to the size. And remember, it gets buffeted about because it's a industrial metal. It's somewhat of a monetary metal, but I don't think it gets that much credit for monetary metal. So I think it loses more. So, for example, when the dollar rises, that's not going to help silver at all, and certainly doesn't help gold. But gold isn't as hurt by it because gold is considered in some respects an antidote to the dollar. You can almost have two safe havens at once. We've seen that. People run into gold, they run into the dollar. Right now what you're having is dollar strength hurting emerging markets, so their currency is weak against gold and the dollar, but not necessarily silver. And then silver has the issue that it's a industrial metal. And right now what's hurting silver is also the idea that maybe trade will be restrained, and that's going to impact silver more than gold, because gold's industry is about 8, 9, 10, 11, 12%, and it's in highly specialized industries. It's not a major industrial metal, but whereas silver today, in the last 3 years, has moved up from about 55% industrial back up to 70%, and that's largely due not to an increase in industry, but to a decrease in the silver investment for silver. So silver doesn't have the same allure as money as does gold. Now, anytime you have inflation, I think people mistake the rising price of silver or gold as being, well, that just proves that it's money. No, it doesn't, because every asset that you can nail down, whether it's butter or whether it's shares or whatever it is, goes up versus the price of or the value of a fiat currency in crisis. So of course silver is going to go up in a currency that's not doing well, but it doesn't have the same rock solid value as gold does. And the reason for that is it used to, when it was handed around and used as a currency and coinage, that's when you saw a tighter relationship between gold and silver, when people actually could trade the silver coins. They don't do that as much. So anyway, keep that silver chart in mind, and let's look at the gold chart over the same period since 1900, and it's a lot more stable. And again, we saw this earlier, I'm bringing it back. The chart shows a pretty much a straight line, not a straight line up, but a trend higher. And again, not as volatile. It just means that the gold is more stable, always has been more stable. And I think that the comparisons with gold and silver, I think they make them too tight. They don't share the same monetary history, even though they were both used as money. Gold has always been what people stored for value, and then the silver was the pocket change to spend. It wasn't meant to be stockpiled and hoarded in the same way. Now, there may be examples in history where it might have been. There was a period of time after the gold rush, because so much gold was found that it flooded eastward, that silver actually became more valuable at the time, just because of the relative imbalance. But for the most part, gold has been the solid metal, and silver has been the one that's been more volatile. And we saw it today, and today is just a microcosm. Gold goes down 0.8%, silver goes down 3%. Now, what happens is, let's go back to the silver price. You won't see those spikes that we saw in gold the same way you'll see them in silver. And that makes silver a speculative metal. So if you look, let's bring up the one since 1800, those spikes are what a speculator lives for. However, those spikes are few and far between. They don't happen very often. And as you can see, you blink and you miss them on both of these charts, because it's a long period of time. It looks like the price went up and down on the same day. That's a longer term chart. But if we look at other charts, even if you look at a chart that shows, I guess, the last 100 years, you'll see the same thing. The spike in 1981 and the spike in 2011 didn't last very long. Now, the one in 1980, not 1981, didn't last because COMEX threw the monkey wrench in there. They just totally screwed that up and forced the Hunt brothers out of their position. And I suppose you can say the same thing about 2011, where all of a sudden in the middle of the night, I think it was April, it might have been, the price went from 50 down to 42 in a bat of an eye, and it never looked back. If you look at the chart, it's gone straight back down. it hit a bottom in 2015, rose up to 2016 and 17, and this year it's started to trend downward. Now it's heading back towards those 2015 lows. But if you look at the gold chart, you don't see yet a retesting of the 1,000 mark that you had in silver. So if you look at gold and silver, historically it's clear. When silver spikes, it spikes higher. There's no two ways about it. It'll give you that dramatic return, but it won't hold it historically. I'm not saying it won't in the future. And when it falls, it gets beaten down much harder than gold. Much, much harder. Gold always seems to form a floor. I don't know if it's because of the central banks, because of the history. You know, if you talk to people around the world, the gold in India, China, it's clearly a preferred metal. It's clearly preferred for jewelry. It's much more of a status symbol. We talked about how rich people flash bling. You talk about the gold standard. You win a gold medal. It's clearly considered much more. They say it was a medal of gentlemen's. There's all types of historic references to gold being the much more desired metal. And also, silver is, it's used in industry. It's used in many sense. People say, well, it's an advantage that they throw it away and they don't recoup it. Well, the reason they do that isn't because they're stupid. It's because the price to recoup it isn't even worth getting it back in many instances. But with the price being in over $10, $12, $15, it has become, people do now recycle silver because it's become cost effective to do so. But it was in the single digits, wasn't worth trying to get 38 cents worth of silver out of a cell phone. Now let's take a look at some of the comments that we might have. I want to get people's opinions on what they think of the silver price and where it's headed. What's up with silver, says cash for cash flow, I see. Yeah, I don't know. I mean, I think I can guess that part of this drop has to do with the dollar strength. But again, gold didn't get hit as much. But that, I think, ties into my theory that silver isn't as much of a monetary metal as gold is. And I think that's clear because central banks don't hold silver. And also because silver got hit harder than gold because people are concerned about declining industry. And silver has a much higher industrial component than gold. How can that be? Vic just said it would start going up. He had done a video 2 or 3 years ago about the gold-silver ratio, and it was about 58, saying, you know, time to buy because the gold-silver ratio was unsustainable. That's a common theme, and I think you hear that in America mostly on the silver channels, that somehow silver is the most valuable metal, most undervalued. I'm not saying it's not undervalued. I'm just saying that the deification of silver that you hear in the U.S., mostly on YouTube channels, you don't have, from what I've heard and spoken to people around the world, in Mexico and India and China, they don't think of silver in the same way that the silver internet community does in the United States. They have this, that silver is almost like God's metal, and you don't have, it's not revered around the world in the same way. I had another guy on from Romania who was telling me the same thing. Silver was not considered doesn't have the same allure as gold. But I think in America, I think since the financial crisis of 2008, there's been developed a very big silver community. And if you think about it, you just think yourself, when did you first become interested in silver, and why do you have the views on silver that you do today? You get a lot of people get very annoyed and very testy when you say something that indicates that maybe silver isn't the greatest thing ever. And I think it's a lot of people who have these very adamant pro-silver views have developed them over the last 10 years, largely as a result, I think, of watching a lot of YouTubes on silver. Rod Panner, here after 10 years of shorting mugs, JP Morgan may have finally switched to a long position. Yeah, watch out when they do. It's all they have to do is let the mugs fly. Are falling silver prices a recession indication, possibly, asked Matty D. Well, that's a possibility. And that's why you wouldn't see it reflected in the the gold price as much, because gold can do well in a recession, at least on the demand side, because it doesn't have the industrial demand that silver does. Could also be not necessarily a recession, but as we mentioned, concern that, well, there might be a recession as a result of the trade wars. So yes, that would be a reason. Declining industrial demand because of the trade wars, or just because we've run out of steam and there's a lot of debt and the stock market's too high. Now, the interesting question would be, if we did have some sort of collapse, either a debt collapse, equity collapse, or both, what then would happen to silver? What then would happen to gold in terms of a safe haven? I would think that what happened in 2008 and 9 and 10 was instructive, is the gold got the first bid, because that was the money that people went to, and then silver played that catch up very quick, and then it fell back down. Because I think the initial fear would be, in a collapse situation, is that silver might lose its industrial value because there'd be less industry, less economic activity, and maybe the monetary portion of demand for silver wouldn't give it the same boost. Whereas most of the gold demand, even if it's jewelry, has some type of investment value. Did anyone buy ASE or low cheap generic rounds today? Single digit silver by 2020, says Walden Books. Mint Mark. If silver were to go up to 22 to 24 an ounce, don't you think everyone who's been stacking since 2011 would sell, dropping the price immediately? Something to think about. Well, I think clearly there's a lot of people who have seen the concept that silver doesn't hold a spike very high, but you don't know how high that spike's going to be. You could sell, if it, let's say there's a spike to 60 and it goes to 23, sure, people will sell out at 23, they'll sell out at 30, 32, and when it gets to 60 and it goes back to 10, people will be kicking themselves they didn't sell at 60, but who knows what's going to happen. But I don't think, though, that when people sell silver, retail silver investors, I don't think that has anything to do with the price. We've seen massive silver buys, massive silver sells in the physical market. They don't seem to move the market. What seems to move the market has been historically the last 40 years since they introduced the COMEX futures. That's what seems to move the market. So I don't think if all the stackers were to decide it's $23, it's time to get out, that would boost the price down. We see. Oh, Mint St. Mark said he bought generic silver today. Miser, silver will be tough to know when to sell. Notice how fast it dropped. Yeah, the more people are aware of that. But then again, history doesn't mean that that's what's going to happen in the future. Let's say there is a spike. Maybe it's sustained the next time. Maybe there won't be another spike. You know, if you go by history, it's every 30 or so years. There won't be a spike until what? 2130, until 2041. So you got plenty of time to think about it if history is any guide. Now, it could spike next week. It could spike 2 years from now. And you don't know if it's ever going to spike, if it's going to spike, how much it's going to spike. So, yes, a tough decision to make there. Although I would say if you're just trading, it's very hard to time something if you're in the physical market. It's a lot easier to time, and that's why people have moved into these digital things, these SLV and stuff that you can trade on a mouse click. Okay, so you guys could see the charts. That's good to know. DW, just hold on. Long-term inflation will make silver go up. Yes, so inflation will make any asset go up. I think that's what I'd like to do, and I did see this chart once from the 70s and 80s. They showed the price of cigarettes, gas, silver, gold, and a bunch of items that you would buy, groceries. And silver did skyrocket versus the other items, mainly because of that massive spike to $50. But any asset, when you have inflation due to a weakened currency, will go higher in price. And people, I think, make the mistake thinking, well, then I just take my silver and I buy it. And that's true if you're buying something like milk, because you can't stockpile milk. So it would make sense that even if milk went higher than the price of silver, at least you'd have the silver because you couldn't stockpile the milk in anticipating it going up against your devalued currency. So that's where silver would make sense. The question is whether other items, cigarettes, things you can store, alcohol, gold, silver. Well, I wonder what's doing better in Venezuela right now. I wonder if valued in dollars or Venezuelan currencies, what's gone up more? Is it silver? Is it gold? Is it alcohol? Is it cigarettes? Is it medicines? That I don't know. John Batil, I'll buy some of your art. Well, I don't have any. It's all been, actually I might have one left, but most of it's been destroyed in artistic fits of rage. So better off buying a Smaulgld mug if you want to have, and those are pretty rare. The Smaulgld mugs, I don't know. I've sold a couple of cases of them, so there's less than 100, right? So you could still buy a limited edition mini Smaulgld muggage. Any comments on Bixweir's YouTube about JP Morgan and silver getting ready to launch? I don't think I saw that one. I watched most of Bix's things. I don't know. It's just a prediction. I don't know. I don't even buy the whole JP Morgan story anyway, so I don't think that's going to have anything to do with it. Cash flow. So silver's a scam. No. Silver's not a scam. The market is volatile. That's all I'm pointing out. It's not a scam if you bought it at 11 and it went to 50. That's not a scam. But the idea of silver as a long-term store of value doesn't bear out by history. That doesn't mean... I think I did an article, interview with, I think it was Silver Doctors, and I said that gold would probably, making up a prediction, gold would probably outperform silver this year. And people just, they resist that. No way, because I think they've just heard so many YouTubes really touting silver. I'm neither a silver, I'm more of a historian. I'm trying to look at this, and I just don't see the silver argument bearing out in history. I think it's a lot of cherry-picked facts. But people cling to those, and they get very angry when you point out why the silver story, silver to skyrocket, gold-silver ratio to come down, JP Morgan silver, they believe that stuff so fervently. And a lot of it's based on a lot of nothing, really, I think. Shock the world, says Phil Kennedy. Welcome. Hey, Phil. Scared Turtle says the ghost of Sun Tzu is waging the art of war against silver. That's what's happening. Sun Tzu says. So 8 the corner. Oh, so God Demnin, where is the positive news about silver? Well, one could look at it as the positive news is it cheap. If you think that this price is cheap, that's the positive news. Well, we've been hearing that for 6 years. Buying opportunity every time it goes down. Every time the gold-silver ratio goes higher, unsustainable. Ask the people in Venezuela. They will tell you. ¿Qué quiere decir, hombre? I don't know what they'll tell you. I haven't spoken to them. I've heard reports that there are people... You see, when you have an economic collapse like that, nothing really helps. You need to get out of there. Because it's not like, okay, now I'm going to be the richest person in Venezuela. There's nothing to buy. You can have all the silver, all the gold, all the Bitcoin, whatever you think is valuable. You really don't have anything. If there's no commerce, it's almost like that movie, The Road. You find gold, what are you going to do with it? If you're in Venezuela, yeah, you could probably use it to get out. I think that's probably what you want. I don't know why people hope for this dollar collapse. They think they're going to get rich if the dollar collapses. You won't be any better off, really. What you want, I think, if you really think that you're going to do well from holding precious metals, you want that. You want what happened in the 70s. You really want that nagging inflation, but you don't want a collapse of the currency. You don't want a collapse of the economy. You want it really to grind, and you really want to show that the gold is valuable because it's not taking that hit. What is the interest in manipulating silver, especially if you take it below cost of extraction? Certain profits are part of it. Why such extreme manipulation? Well, remember, there's a lot of assumptions in that statement, Carl. What is the interest in manipulating silver? That assumes it is manipulated. All right, let's assume it's manipulated. Well, if you take it below the cost of extraction, could be because they're trying to put the miners out of business because they owe money to the banks, and then the banks want to take over the mines. How about that? The other thing about cost of extraction, I don't view that as necessarily a big influence on price, because most of the gold is, and a good portion of the silver, almost all the gold, not all the gold, but a good portion of the gold that's traded is not traded from freshly mined gold. So there's a lot of gold above ground that gets traded back and forth. And certainly profits are part of it. Why such extreme manipulation? Okay, so assume it's manipulated, and putting aside the below the cost of extraction, if indeed the idea is that gold and silver are threats to fiat currency, they wage a war on all fronts. They tell people it's not worth anything. They tell people the dollar is the king, the euro is the king. They tell people that digital money is easier to use, and that the gold and silver, since they're threats, they try to downplay it. And so one of the things they did is the idea of a futures market is to, one, make people trade on the price, not on the value, the metal, so you don't have it, so you get used to not having it. And then the other one is, because the price is volatile, does get smashed down, you discourage people from wanting to have it. And that's clearly what's happened to silver. I think you saw a really big run-up in the you saw a very big run-up in, I have some charts on this when I used to do my annual silver report. Silver for investment demand was only, it was like 5, 6, 7% in 2006 and 7, 2005. And by 2015, because you went from selling 8 or 9 million American Silver Eagles to 47 million, you went from selling 1 million or so Canadian Silver Maple Leafs to 40 million. You saw this massive increase in investment silver to the point where silver went to 22-23% of overall demand when you looked at it from the investment. Took the silver rounds, bars, and coins. And I think what's happened since then, people have been discouraged because the silver sales have dropped from, like, the U.S. Mint from 47 million. This year, we're at 9 million through August. We'll probably sell, 12 million? So you're seeing a big drop in physical silver. And part of that, I believe, has to do with people that bought all during 2013, 14, and 15, thinking that they were buying at bargain prices. And now you've got what? You have... you're still at bargain prices. So it's discouraging. And that discourages the physical buying of silver. And that's exactly what they want if they're trying to wean people off of physical money. Because remember, they don't just want the dollar, the euro, because it's the national currency. They want it because they want to be able to conduct what they call monetary policy. It gives them control over what's going on in the world, what's going on in the economy. They can move the lever by interest rates and so on. If people are viewing gold and silver as the store of value rather than the currency, they have a problem. So I think that's why they mess around with it so much. But clearly, when you have this this drop, I mean, the drop is dramatic in physical demand for silver from retail, down from 5% up to 22%, probably back down to about 10%. It's been like a 70% drop since 2015 in physical buying of silver. Tom, lots of effort has been applied to scaring people right out of both silver and gold. That is correct. Could there be? Yeah, absolutely there is. That's been proven. The especially starting in 1971, Tom, if you remember Nixon's speech, to paraphrase, he said, the dollar isn't a dollar because it's backed by gold. He said the dollar is a dollar because it's the dollar, and it's issued by the United States. And that's the trick, to convince people that that's why. And that's why when they finally allowed Americans to hold gold after 1934, this confiscation 1933, Executive Order 6102, when they finally allowed at the end of 1974, in Jerry Ford's year, Americans to hold gold. That's the same year they instituted the COMEX futures contract to convince people, to dissuade people from holding the physical metal. So clearly, Tom, yes, there's totally an agenda here, because you want the fiat currency that's issued by either the government. The Fed is the only one. There's only one other central bank that isn't owned by the country. All the other countries are run by the Treasury. The Fed is a private bank that's been outsourced. Silver will be fine sometime. Didn't Venezuela outlaw gold a few years ago? So step one, take your gold and raise the prices. Well, that's what the U.S. did. The goal was 2067, was fixed, and that's why you saw that stable price. They don't bother with silver. And then the price, they collected the gold, and in 6 to 8 months, they passed the Gold Act of 1934 in January and priced it at $35 an ounce. Look at those spikes. Peter Larkin, this is the classic story. New technologies will create high demand silver, and then they'll figure out ways to use copper instead. Exactly. You see, all these new demands that they come up with, they immediately come up with ways either to use an alternative metal like copper or to somehow use less of the silver. It's disturbing to hear people say they're coming up with more uses of silver every day. Yes, so what? How much of the silver are they going to use? Same with solar. I had a discussion with a colleague on the amount of silver that might be needed in 10 years for solar, and we were discussing the extrapolation of how much silver was used per panel in 2012 or something. And then we realized that they're not going to use that much silver per panel in 2028 as they did in 2012. Because if they did, they'd run up into a shortage, and they're not going to do it. They're not going to drive the price up to silver to $480 just so they can make, because then it wouldn't make sense to make solar energy at all if you had to pay that much for the silver. So they figure out ways to either not use silver or to use far less of it, and that's called thrifting, and they are doing that all the time. Indeed, the amount of silver used for electronics since 2010, it was 310 million ounces, I believe, in 2010. And 2017, it was 230 million. Does that mean we're using fewer electronics? No. It just means that smaller electronics, they use less silver in the electronics. So the idea that silver's so versatile and they're going to use more of it, maybe not. All right, let's see. Got more comments than I thought. Well, we'll get to them all. If I haven't got to your comments, I'm going to get there. Glad to see you guys are talking to each other. Okay. Deceive no more. Silver's amazing. I'm going to keep stacking. Well, that's an enthusiastic comment. Tom, my grandparents went through depression. They stored silver coins for years. Yeah, no doubt. I mean, historically, you didn't lose holding it. Just that you have to keep in mind, though, those prices did move up and down a lot. Even during the Depression, silver was actually got to a low, I think, in the 30s. Did not hold its value very well. It was gold because they set it at a higher price. That's why you see that gold silver chart that I showed you earlier. If you didn't see it, go back and check it out when the video uploads. But the gold silver ratio hit 100 to 1 back in the 30s and 40s. Carl Joseph DeMarco, I think some commentators are right when they say silver is the most undervalued asset on the planet, or close to any, but that doesn't really matter. Well, we're being subjective because the market is saying it's been undervalued for 10 years. In fact, the price of silver not only is the same price as it was in 2007, it's the same price as it was in 1979, when the price first started to move up. And as you say, it's only worth what people will pay for it in the end. 143 Drew Wind, breakdown, go ahead and give it to me. Breakdown 12 or 13 is all right. I recognize that. That's Tom Petty, I believe. Yes. All right. Hello, Walden. Okay. Did Up Morgan, I guess that's JP Morgan, says Kurt Gerhant, just go long on silver? Or are they done shorting silver? I don't know. Hard to tell. Venezuela, food. Yep. Kyle says, hedge your silver stack by buying ZSL ETF. Yeah, a lot of people have different strategies. You know, the silver bullion dealers, they hedge with short contracts. So they buy a certain amount of silver and then they hedge it by selling that amount short, because the silver bullion dealers and the gold bullion dealers make money by selling per unit. They're not trying to make money by buying silver at $14 an ounce and hoping they can sell it to you for $18. That would be very risky. And especially the last 5 years, they would have lost money because they'd buy it at 25, it'd go to 22, and then have to sell it to you for 22, they'd lose $3. JP Morgan going long, who knows? Walden Tree, he's not a bull. Says 14 is not cheap. $4 is cheap. Deceive no more. I want a currency that's true and holds its value. Yeah, I don't know if that's silver, though, over the last 10 years. It hasn't been. Gold has been. I did a chart. I showed where if you had bought over the last 20 years, the average price of gold, this is in dollars, of that year, 1 ounce every year, you would have held your value. Even with the drop from 2011 to now, you'd be all right. If you had done it in silver, you would not preserve your value. I mean, the price of silver is lower now than 10 years ago. That's not holding your value. For silver to hold its value, it's got to be longer term, because you got to pick up those big spikes that happen every few decades. Smaulgld trade. I never understood why silver bugs want silver to be expensive. They want people to use it as money. But really all they cared about was becoming rich. Well, not to get off on a topic, when I hear people praising China because they like gold, they just want to crush the dollar because they think somehow if the dollar does poorly, they're going to get rich. And they're basically placing their gold and silver portfolio above all else. That's the most important thing. Doesn't matter how you get there as long as the price goes higher. Shark Air, from a technical perspective, I did want to ask somebody who does these charts. Silver has double top 3 times a charm, should move to $90 if we can reach that level. Yeah, but what does this current drop mean? I don't know how to read charts other than I look at them, and I don't think anyone does, because if you could, then you would make a fortune just by looking at a chart. But there are people who are pretty good at it, though. I'm not. Well, Dr. Modesto, exactly. It's like the crypto people were interested in the price and its adoption. Oh, clearly that's the case. Clearly, no one's really altruistic about this. No one really wants sound money. If you really wanted sound money, think about it. Your gold wouldn't be worth much. They'd reprice the price of gold, whatever it was. And that price probably too low for your liking. And that would be it. Then they take the gold out. They would take all your gold, and they would say the price of gold is now $2,200, whatever the number is. You'd have no way to, quote, protect yourself, and no way to get rich, because the gold price would be set at $2,200. It's the same with the cryptos. People don't want them because they want to destroy the bank, whatever they say. They want the price to moon, and they want their Lambo. That's why it's funny. People who defend, just measure your wealth in ounces. Yeah, go ahead and try that. No one wants that. Why are they upset about manipulation? Because it keeps the dollar price of the silver down, the dollar price of the gold down. Carl Joseph DeMarco, crypto people should be concerned about adoption of a vault because in the end it will drive prices. It will, I suppose, if people feel the need that they have to go out and buy crypto because it's better to use to buy. But right now, when people say the more people that use it, the price will go higher, I think the more people that use it means the more people that are selling it and the price will go down. I think the only reason you're going to get mass adoption is if merchants actually offer you discounts for using it, and then you realize, oh, it's better to have crypto. But whatever discount they could give you right now is not a reason to buy crypto, because if Bitcoin can go up and down 5-10% in a day, which it can, the merchant giving you, saying, oh, you don't have to pay the 3% Visa fee, I'm going to give you a discount, that's probably not enough of an incentive yet. Yeah, well, Malden Tree is saying gold, silver, crypto bug people put on the mantle of morality. Yes, you have to have integrity and only like honest money. that goes higher. Walden Tree. All right, what else have we got here? Interesting scenario is for the Chinese trade solar panel for Saudi and Persian Gulf built with Bangladeshi labor. All right, let's see. I think we're done. We got through all the comments tonight in less than an hour. I want to thank everybody for joining me. But remember, the most important takeaway is that mugs are real wealth. So buy your Smaulgld mug today. I'm going to give you the link there. Mugs cannot go to zero. Mugs are great barter items. You can defend yourself with a mug. You can get the Smaulgld Classic and Super Classic mugs. Those mugs will serve you well. You can barter them themselves. You could put barter items in them. You should listen to 18 reasons why you should buy a Smaulgld mug. And you do help out the Smaulgld site when you do purchase a Smaulgld mug. And they are attractive. And you can protect yourself with a mug. Many states allow you to conceal carry a mug. And you can always, any state allows you to conceal carry. And some places even allow you to open carry. And a mug, you can hurl it at somebody. You can use it. They make nice fist size. Better than brass knuckles. So mugs are cool all around. And I'm going to leave you with that. And here are the mugs. And also, if you've enjoyed this or any of the podcasts, and we do this every night at 8 o'clock, please consider becoming a Smaulgld patron or donating via PayPal, Bitcoin, or Litecoin. And I'm going to leave up those, I guess it's going to show up on your screen, but you can see the Smaulgld Classic mug is on the top, and the Smaulgld Super Classic is on the bottom. And if you order tonight, I will put in a Smaulgld free Game Changer eraser in your mug. They will be delivered from the Smaulgld headquarters with free shipping, $19.99 for the Classic, $23.99 for the Super Classic. The free eraser offer only applies to the Classic and Super Classic mug because I have those at hand here. The others are shipped from the manufacturer, the Smaulgld To Go travel mug, and then the Smaulgld espresso mug. And you can get those at the Smaulgld store, and I'll leave you a link there. And then I'm going to leave you alone. And I want to thank you for all your intelligent comments and for tuning in tonight. And we'll see you tomorrow again at around, try to be on time, 8 o'clock Eastern Standard Time. If you missed it on YouTube tonight, you can watch it immediately on YouTube. It should be up as soon as I sign off, pretty much. Or it'll be up on BitChute. It'll be up on Minds.com under the Smaulgld channel. Steam it, Smaulgld channel. A Gab I'll post it on. Facebook, Twitter, and BitChute. It'll be up on BitChute. So if you haven't subscribed to any of those, please do, or sign up for an account and subscribe to Smaulgld on BitChute, Minds, Gab, Steemit, and so on. Thanks everyone for listening. Let me see if I got any more comments before I sign off. Sometimes I get some stragglers. Why would somebody want a Lambo? That's just what they want. I don't know. I wouldn't buy one. Deceive no more. Thanks for listening. Thank you. I use my mug twice a day, Carl. I don't have a picture for you. I have lots of pictures. People have sent me pictures of their mugs in various places, but I don't have one from you yet, Carl. All right. Thanks, everyone, and good night.